We also got Fed Chair Jay Powell talking in Zurich, no less.
Said he first went to Switzerland 44 years ago.
Oh.
Loves Switzerland.
Loves Switzerland.
According to Powell.
Chocolate, the whole thing. So the Fed not forecasting a recession either. He's looking at the same numbers that we are. Obviously, though, we've got a meeting coming up really soon, and this is part of the dual mandate, like the real mandate.
Yep.
And you look at these numbers and you think, oh, we still need to cut. Nothing really changed.
He said the magic words, right? Act as appropriate. So they are going to cut rates.
I think I tweeted you as soon as that. There's your next rate cut. There's your 25 basis rate.
And look, I don't think Powell was going to, and what's interesting about this appearance, there was no prepared remarks that were shared by the Federal Reserve.
I love that.
Yeah,
I love that.
Now, of course,
way better. That is what they should do every time.
Okay, but if you watched it, he's reading off his notes, so he knew what he was going to say.
It makes it more exciting.
Yeah, you had to actually listen.
Yes.
You couldn't just read the text and then move on with your life. I mean, look, Jay Powell has said the Fed is going to be easier with policy. The reason why are the three factors we discussed earlier this week, and the three factors that he has discussed, which is low inflation, the trade war, and slowing global growth. So those three pillars are saying to him, we have the opportunity to expand the U.S. expansion, or continue the U.S. expansion by being easier with our policy setting. Now, there's all kinds of things you can read into that, but these are the words he continues to say. And so that is what he is justifying the policy path with, and that's what he's probably going to continue justifying it with, and that just is what it is.
I'm just unsure if another rate cut will alleviate that uncertainty we're hearing from corporate America. Just because you lower rates by 25 basis points, I don't know if that gives you more incentive to go out there and go on a hiring spree or buy lots of capital and equipment. If you're seeing your orders slow in your business, and I think a lot of the manufacturing reports we have seen suggest that orders are not only slowing, they're slowing pretty sharply.
Yes. I mean, I guess the thing is, you could make the argument that what we saw from Apple this week is that's like what the Fed can accomplish, right? So Apple goes out, issues, they announce they're going to issue $7 billion of debt, first debt raise since 2017. Companies are going to be able to raise capital more easily if interest rates are lower. They've already come down considerably as a result of the market getting in front of the Fed, but that's what the Fed can control. And I do think that the reaction we saw in the stock market last year when there were concerns over a recession was because corporate balance sheets are really the fragile part of the economy right now. It's not our balance sheets, not consumer balance sheets, it's corporate balance sheets. So lower rates, all else equal, I believe, this is the fact, will allow companies to keep their balance sheets in better shape than they would otherwise if the economy turns south. That's the lever the Fed can pull.
But Apple's just a great example because Apple has a fantastic balance sheet. They have $200 billion worth of cash. So the fact that they're going to get at $7 billion, be able to refinance whatever, do some buybacks.
Yeah, they're going to buy back stock, right?
They're going to buy back stock. There's no jobs coming out of Apple going and tapping the debt market for $7 billion.
Jobs for banks.
Some big jobs, like
banks.
3 people,
but
30 people, whatever it is. It's not actually manufacturing jobs that are going to come out of Apple being able to go and get $7 billion because Apple already has over $200 billion in cash.
Right, but I'm saying if you, as the central bank, have some ability to soothe or smooth the cycle for corporates as a result of your rate policy, then you can perhaps avoid some of those layoffs. You know, the story I wrote this morning, it's like by November 2008, when the NBER called the recession official, 3 million people had already lost their jobs. We're not talking about slowing and hiring, we're talking about layoffs. So if you can get it to the point where you don't get several million people losing their jobs, I think that's how you can elongate a cycle and avoid a recession, even with all this stuff going on.